Guys, how we doing? It is Saturday, 6th of July, and I'm going to run through what I do every single week. Usually I do it on a Sunday, but because I have time today on Saturday, I thought, get it over and done with, right? I hate thinking, oh God, tomorrow I've still got to do this. Just get it over and done with. I've got it on live, so if any of you want to join me, you can join me, but no one has yet, and I record it anyway, right? So you can always watch it again. So now we're going to review last week and next week, and let's see what we've got. And I'll just update this. As you know, I repeat myself every week when it comes to certain things because we never know who's a new member, right? And you may have seen this for the 20th time, and someone may just be seeing this for the first time, right? And on top of that, if you're seeing it for the 20th time, that's still fine. Why? Because I'm doing it all on purpose, simply because we do the same thing every single week. And that's literally, if you get into trading, that's literally going to be your life. You just build up the same habit. You do the exact same thing every single week until it becomes a habit. And you're never going to stop doing that, right? So that's why I keep repeating myself, because that's all I do is I simply keep repeating myself every single week. And that's the habit that you want to build up, all right? So what I do is, let's crack on. This week is that, let's see, what week was that? That was the 30th of June down to when? Yeah, okay. So that's basically last week because we're on Saturday, right? If we're on Sunday, when I normally do it, it always says last week. But because this is still Saturday, it still says this week, right? So all I do is come to filter right away. I do each currency individually except from AUD, Chinese yuan, and New Zealand dollar, because they're all closely correlated, right? And they never have a lot, those three pairs never have a lot of news. Like if you were to do pound, euro, USD together, the fucking page is going to be huge. It's going to be about 100 fucking lines on there, right? And trying to gauge which one is which is a total disaster, right? But with these three currencies, they're all correlated, right? They're all matched to each other. So let's have a look. Last week, Chinese manufacturing PMI was 49.5. So it hasn't moved. However, anything below 50 is bearish. Even if it's 49.5, that's bearish, right? And even if it's 50.0, that's bullish. So anything 50 and above is bullish, okay? Anything below 50, even if it's 49.9, that's still bearish, right? So look, here's another thing to note. When this here says it was previously 51.1 and it's now dropped to 50.5, don't get confused and think that that means that that's now bearish. It's not, right? It's still bullish because it's above 50. It just means that things are slowing down, okay? That's where people get confused. And when Forex Factory puts them in red, you automatically think that's something negative, right? It's usually not. Non-manufacturing PMI is 50.5, sorry. So that's like positive and negative news, right? Now, although we do not trade Chinese currency, of course, they do have a huge impact on the world because it's the world's largest economy, right? So whenever Chinese economy is strong, it provides strength to the Aussie dollar, okay? Whenever the Chinese economy is weak, it provides weakness to the Aussie dollar, okay? When the US dollar is strong, it's the opposite. It provides weakness to the AUD. When the USD, United States dollar, is strong, Aussie becomes weak. When the USD becomes weak, Aussie becomes strong. So that can help us, right? We have to paint this whole big picture. You can't just take things one by one and be like, right, that's weak, right, this is strong. You need context, right? You need to put all the pieces of the jigsaw puzzle together before you can see the final photograph, right? And that's essentially all you're doing with these little economy jigsaws, okay? AUD inflation, we don't really care about that. It's fine. Cakes and PMI. That Cakes and PMI is quite important. I don't know why it's yellow, but it's 51.8, so that's strong. So there's two strong for China, 1 week. AUD commodity prices year on year have increased. Okay, it's still minus 4.1, which is low, but it was previously -6, so it is getting better, right? What else we got? Commodity prices, a little bit of strength for the ANZ. Aussie retail sales month on month, they're getting better. It's only month on month, so month on month provides you with kind of short term vision. Oh, it's getting strong this month. Do you know what I'm saying? If it's year on year, it's like, wow, it's the whole thing's becoming strong throughout, right? So you need to include that in the context as well. If it's retail sales month on month, quarter on quarter, year on year, blah, blah, blah. Building approvals, 5.5, that's massively up. That's great. Because it means that more things are being built, so more money is getting pumped into the economy. If more money is being pumped into the economy, it means more people are in jobs. They're working, they're getting money. More people getting money, it means more people are spending, which means that the economy is getting better, and then the currency is getting stronger, right? This is where you have to look at the spin, interpret it and stuff. Cakes and services PMI 51.2. If you don't know what that is, you just click this little folder and it will tell you here. Level of a diffusion index based on surveyed purchasing managers in the services industry. There you go. And it will tell you, usually effect actual greater than forecast is good for the currency. Released monthly on the third business day, blah, blah, blah. And it will tell you why traders care. Okay. I won't bore you with it, but it's all there if you want to read it, right? I always prefer, when I'm getting my actual data for news moves, right? I don't use Forex Factory. I use this. It's tradingeconomics.com. It's fucking phenomenal, right? And if you're waiting on a news move and it's happening at 1 p.m., the minute the clock strikes 1 p.m., the figures will instantly appear on this platform. And if you look at the actual market, the market wouldn't have moved yet, right? And if you look at Forex Factory, it's still going to be loading for about 3 to 5 minutes after it's already been released on here. So if you're someone who likes to trade the news, which I don't, but if you do, you can use this instead of Forex Factory. I just do my weekly reviews on Forex Factory because it's much easier on the eye, right? It's very easy to see. It's very easy to, turn on and off different currency pairs. You can do that on this. You can turn them on and off. It's just a bit more of a pain in the arse on this, okay? So I just prefer using Forex Factory for my weekly reviews, okay? So let's look at next week, and then we'll review the currency strengths, right? AUD, West Bank, just look at the important ones. Chinese CPI year on year. We've got coming up next week. We've got Chinese PPI year on year coming up. They're all very important. NZD official cash rate statement. Okay. So we'll be looking to see if they lower the rates. Like if they make like Euro previously brought it down to like 5.25 or something like that. They brought it down by 25 base points, right, which is like 0.25%. Let's see what they do. I don't see them gonna change the inflation rates, but you never know, right? But I don't imagine it. FPI month on month. Okay, so we have got some big news next week for China, which, like I said, we don't trade Chinese currency, but it has a big effect on Aussie and New Zealand, right? So for me, in the categories on my book, strong, weak, and neutral. Remember, I do them in this order: strong, then weak, then neutral, because whichever is neutral, I then know that I'm not trading that pair, right? And then I match up a strong to a weak, and then we trade that. Okay, that's the best way to do it. You can absolutely trade strong to a neutral. You can trade neutral to a weak. You absolutely can. But it's all about giving yourself the highest probability trades, right? Why would you take a trade that's more like, it's 50-50. Why would you take that when you don't have to take it? You can just choose the trades which are like fucking 80% in your favor. Of course you're going to take them, right? You want to use every single tool in the box to get your percentage of the trade going in your way, to get your probabilities higher, right? That's the whole point. And one of the best ways to do that is to understand the economics of the countries and understand reading the data, how to piece that together, and then you can select which countries are strong, which countries are weak, which countries are neutral. If it's neutral, score it off. I'm not going to bother looking at that pair right now until it then gives me more news in a couple of weeks' time and it falls into a different category. If it then falls into being weak with negative news all the time, or it falls into being strong again, and then we look to slip it back in, and trade it. And that's why we do this every week, because it can change, okay? So for me, Aussie dollar is strong, New Zealand dollar is weak, and of course we don't trade China, so that's fine. Let's now look at our next pair, which is going to be Canadian dollar. So this week, what do we have? With manufacturing PMI, which is 49.3. We kind of expect that. The previous was the same because Canada isn't really a manufacturing country, right? What's the one we always say with Canada? Even when the economy's shit, you have to be a little bit aware because the Canadian dollar pardon me, gets this kind of false strength, if you want to call it that, when oil does well, because the Canadian dollar is heavily backed by oil, right? So if oil price is shooting up, you will see, even though the Canadian economy is dog shit, it will get this weird strength from some. If you're in a pair with a Canadian dollar and you're doing a sell, and it gets this weird strength and starts going up, you're like, where the fuck is that coming from? Because the Canadian dollar shit. It's because oil's doing well, right? If you look, I guarantee you, if you look at oil, you'll be like, fuck, oil's flying. That's why the Canadian dollar is flying, right? So it's this kind of, you have to be aware of that, all right? What else we got here? Trade balance, shit. Canadian employment change. Look, their employment change is horrific. So their employment went from 27.3 thousand to minus 1.4k. That's a fucking huge jump into the red zone, guys. Unemployment rose. It rose by 0.2%, but that means unemployment is going up and employment is coming down. Also, their average earnings is actually quite high, but it's fucking impossible to live there, right? People that live there they're working in jobs and they're still going to fucking food banks like the UK, you know, because it's hard going. So it's pretty shit overall. IV PMI is 62.5. That's good. So it has a little bit of strength there, but overall Canadian dollar is not very good. It's not one that I would be, it's not one I would be jumping out my seat to be taking long anytime soon. Okay. Next week we've got no news for Canadian dollar. So for me, Canadian dollar is weak. Okay. Moving on. What have we got here, guys? CHF. So Swiss franc. It's always boring news, right? That's why they always say safe as Swiss, because it's always fucking safe. They're always in this kind of 2%. Their inflation's never massive. Their deflation's never massive, and that's why it's always a safe haven. And they don't go to a fucking war with anyone, right? They've got about 10 soldiers in the country, so who are they going to fight? Nobody. Retail sales year on year is down. Manufacturing PMI, that's bearish. However, you have to take it with the context, right? We always anticipate manufacturing PMI in the Swiss franc to be bearish. Why? Because it's not a manufacturing country. Every country has manufacturing services, and every country has manufacturing PMI, and every country has services PMI, right? But some countries are heavier on the manufacturing side, and some countries are heavier on the services side. For example, when have you seen fucking factory conveyor belts mass producing iPhones in Switzerland? Never. That shit's for China and Vietnam and stuff, right? When have you seen Swiss providing services? Fucking banking services for the elite and the big rich fuckers, right? That's exactly what it is. It provides services. So you want to see the services PMI high, you would expect that to be high, and you would always expect manufacturing PMI to be low because it's not a manufacturing country. So when you see these numbers here being bearish, it doesn't affect the market and make the currency fly because everyone already knows that that's going to be bearish, right? So it's already priced in. So you have to bear that in mind, okay? Let's have a look. What else we got? CHF unemployment rate. Unemployment's the same. I mean, everybody's got a fucking job there, right? It's a tiny country. They're not really short of jobs. CPI month on month, it's came down, dropped slightly. That's okay. It's month on month, so it's a short-term effect. That's okay. Foreign currency reserves, 711 billion there. Okay. Nothing really special there. And next week, we've got zero news. Okay, so for me, CHF is... It's kind of in limbo between weak to neutral. I'm going to put it in weak. It's not very often I trade that currency anyway, so I'm going to put it between weak to neutral, right? What we got here, look at how much news you get with euro, right? This is why I don't pair euro, pound, and GBP together, because the amount of news is just insane. And trying to work out what's what, it's far easier to do it individually, right? So let's see what we had last week. And for euro, remember, of course, you will see one that says like Spanish manufacturing, Italian manufacturing. We really don't, you can have a look at it, but we really don't care about them, right? The ones that we care about is France and Germany, because they're the ones that have the biggest economies within the Eurozone to actually make a difference in the euro, right? Spain and Italy don't really. If it's Spanish information or Italian information, which is year on year, then we can have a look at it and maybe slightly take it into consideration, right? But overall, we don't really give a shit what Spain and Italy's doing. We care about what France and Germany are doing because they're the big players, right? And of course, Germany is a manufacturing country. You all know that. They all make cars and blah, blah, blah. So we'd expect the manufacturing PMI to be high and the services to be kind of medium. They do provide services as well, but it's not like Swiss franc, right? It's not like Britain where they provide so much services. So in Germany, would expect manufacturing to be high, above 50, and France would expect services to be high because France isn't a manufacturing country either, right? So let's see what we got. French preliminary elections. Germany prelim CPI month on month. That's pretty much the same. Previous, so it was the same, no real change. Spanish we don't care about, but it's positive. Italy we don't care about, and it's bearish. Don't look at this in red and think that that means bearish, and do not look at this because it's green and think that that means bullish, okay? Because it does not. It's simply green because it was higher than forecasted. Okay, that's why it's green. It was higher than forecasted and it was higher than previous. This is red because it was lower than previous and lower than forecasted. However, it's still above 50. So what does that mean? It's bullish, right? This is below 50, so that's bearish, okay? French final manufacturing PMI, 45.4, so that's pretty shit, but we would expect that because France is not a manufacturing country. Germany, final manufacturing PMI is 43.5. That is dog shit, and we would not expect that because it's a manufacturing country. We want to see that above 50 to show strength in the euro, okay? So far, all euro news is pretty poor, except from that one in Spain, but Spain doesn't have enough power to actually move the euro, okay? So it's all about context. What else we got, guys? Let's have a quick look. Yep, final manufacturing PMI, shit. Spanish unemployment change, horrific. Italy, who cares? Core CPI flash estimate year on year. That's pretty good. That's decent. Core CPI flash estimate, it's remained the same pretty much. It's 1.1% less, so it's okay. Unemployment rate remained the same, 6.4. Unemployment's quite high, so that's not good, right? French final services PMI, it's getting better, but it's still bearish, okay? We want to see this above 50, so it's still bearish. It's just that you've got like 6 or 7 bearish newses, right? Bearish number, data, etc. for the Eurozone. So the Eurozone's pretty shit right now. German final services PMI is 53.1. That's good. Final services PMI is 52.8. That's good, bullish. PPI month on month is poor. Pardon me. German factory orders is getting worse, so that's again negative. German industrial production, shit. French industrial production, terrible. French trade balance, terrible. Retail sales month on month are poor. So it's not even mixed data, guys, right? Mixed data, if you get one good, one bad, one good, one bad, and at the end of it, you've maybe got 5 bad and 7 good, or 7 bad and 5 good. That's called mixed data because it's quite neck and neck, right? This is not. There's like two pieces of good news here for the euro, and the rest of it's dog shit. So euro is currently at neutral for me. Why is it in neutral? Because they're not really cutting rates yet. We need to wait and see if there's. So it's been parked in neutral for now, right? Some may see it as weak. You can do that. I don't quite see it as weak. I see it as neutral, because it was strong 2 weeks ago, right? So I'd see it as neutral, and what we're waiting for now is to see if the ECB, European Central Bank, cut rates by 25 base points or whatever, and if they do that, it will then move into weakness. Okay, it won't be overall weak like for the next year, but it will be weakness like for the next month or two, right? Short-term weakness. For now, I have placed it in neutral. All right, guys. So it's just, I just won't be looking to trade any euro pairs. That's all that means. French election, Germany trade balance next week. We don't have much news next week. We do have German final CPI month on month. Yeah, you could look at that. PMI and French CPI next Friday. So yeah, we can take them on board. Just remember, pardon me, they are month on month. So when you get month on month news, that's going to show you like short-term weakness or strength, right? It's either going to be up or down, but it's in the short term. It's not the overall big picture, okay? So for me, euro is neutral, all right? Let's have a look at the pound. This week, what do we have? Nationwide HPI is decent. It was that will have a positive effect because it was forecasted to be less, and because even though it was less than previous, it was forecasted to be much worse. So because it's still above, then it gives a kind of positive effect for the pound. Okay, now final manufacturing PMI is 50. Who's that? Final manufacturing PMI is 50.9. Now, like I said, don't be put off in thinking that's bearish because it's red. It's only red because it's slightly slowed down from previous, which was 51.4, right? And they expected it to be 51.4 again. So it may have given a bearish reaction when this news came out. You know, when you saw it on TradeView or Forex Factory, and then you look on the charts and it gives a bearish reaction to pound against maybe stronger pairs like USD or something else, AUD. This is still bullish, right? And it's especially bullish. Why? Because the UK is not a manufacturing country. It does not provide manufacturing services. We send all that shit to China. We are a services country, right? So the fact that the manufacturing PMI is above 50 is actually fucking phenomenal for the UK, all right? So that's really good. M4 money supply month on month, that's pretty poor, but it's -1. It's not that bad, really. Mortgage approvals remained this. Just it dipped slightly. That's okay. It just means things are slowing down. It doesn't mean things are turning yet for the pound to become weak, but it does mean things are slowing down, right? When we have a look. Final services PMI 52.1. Fucking fantastic because we are a services country. So when that's down, it's not looking good for the UK. We let Russians fucking launder all their money and stuff in London. That's the services we provide, and we just pretend it's charities and they buy these $60 million fucking flats and nobody lives in them, right? That's the kind of bullshit services the UK provides so that Russian gangsters can wash their money. GBP, Parliament elections, yeah. The changeover between Sunak and that fucking Starmer, it's like changing your shirt when you've shit your pants. You know what I mean? It's fucking pointless. The two of them are wankers. GBP construction PMI 52.2. Like I said, it's slowed down. However, it is above 50, guys, so that's still great. That's still very positive for the pound, actually. Many people, like retail traders that are all jumping in sells against the pound, they'll just see that that's red, and they don't understand the context behind it. It does not mean bearish. It's still very much bullish. It just means things are slowing down a little bit this month, right? Next month, we could see it pick up again, and that's just the way things go. Halifax HPI, I think this is like mortgage approvals. Let me just check. Yeah, there we go. Change in the price of homes finance. Yeah, so it's like it's like Halifax approving mortgages. So that's dropped. That's no big deal. Housing equity withdrawal. Okay. So for me, pound is still strong, guys. Where have I put that? Yes, I have. It's in strong. Pound is still strong for me, but it's pound and USD and euro. They're at the top of the curve, right? Like I'll just fucking show you because a picture paints 1,000 words. We all fuck off. Go away. We always talk about economies move in peaks and troughs, right? So what you get is you get 5 to 8 years of goodness, which is inflation, right? You get 5 to 8 years of inflation. Now, the everyday Joe blogs doesn't like inflation. The everyday working person, inflation when it's high is not good for you because it's the kind of scenario where you're working 2 jobs and you're still having to use fucking food banks because everything's so expensive, right? So it's not good for you as an everyday bod, right? But as a trader, inflation is fucking fantastic. We love it because that's where you make the money in inflation. And I'm not trying to sound as if I'm bloody, what's his face, George Soros here, as if I hate humanity and I just like making money. Not at all, but that's just the way it fucking is, right? Inflation is not good for the everyday person, but it is good if you're a trader, okay? We like inflation. So what happens is, I'll show you in both. I'll show you in a draw and then I'll show you on the charts, right? Inflation goes like this for about, then you get down, up, and it goes like this for about 5 to 8 years, right? You get 5 to 8 years of real goodness, and then you get deflation, right? Where everybody has a really shit life for 2 to 4 years, and it'll go like this. Boom. You get this little up. Boom. 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 Right? And then it'll go back again. You'll get 5 to 8 years of goodness. And it's, it's much longer, right? And then you get the crash, 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 right? That's what you get. So right now, pairs like pound, here's USD, here's euro, here is Japanese yen, here is CHF, here is NZD. What else have we got? Aussie dollar. Yeah, Aussie dollar's probably here as well. And what you'll have is all these pairs are now coming round here, and they're coming up just now, but they're going to start dipping, right? And as these start coming down and they start cutting rates and blah blah blah, these shit pairs like New Zealand, Japanese yen, and maybe you could say Swiss franc, whatever, they're going to start pushing up. And when this happens, that's when you start to do sells against pairs like Japanese pound, Japanese yen, USD, Japanese yen, and so on, right? And the whole kind of cycle of economies, it always works in this cycle. I'll show you right now. If we come across here, what pair am I on? Pound, okay. And we come to market. I'll show you. It's unbelievable. Let's look at USD. Let me click on the graph. Look. So you get your 5 to 8 years up gradually, crash, 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 right? Then you get your stability, and then you get your bang, 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 bang. What have we got here? We've got a fucking plateau, guys. What comes after the plateau? A big fucking melt. That's what happens. Then let's go back. You can see it in every pair. Let's have a look at pound. Let's get rid of that. Oh, that's a bit of a shit example, but it's an example. Oh, here we go. That's a bit of a crap example. Let's see, because it only goes to a certain time, right? So let's see. You can see it here anyway, but let's look for a better example. What have we got? Let's try euro graph. Is that a shit? Oh, there we go. There we go. Look, so you've got your gradual. You've got your years of everything being good. Boom, you've got a little fake move, and then look, melt. You see that? It's exactly what I've drawn here. That's how fucking economies work, guys, and it's constantly like that. All right, so that's the kind of way it moves. Excuse me. What was I doing there? What do I want to be? Calendar. Oh, I've bloody closed the wrong one, haven't I? What a dick. Right, filter. We were on pound. Give me a second. I'll get back to pound. Then we've only got a few more to do, and then I'll go into marking up my charts, right, if you want to watch that. So, yeah, we know. So, for me, pound is strong. Let's see what we've got next week. Retail sales monitor year on year. We want to see that, because if retail sales are higher, that's good. It means people are spending money. If people spend money, what does that mean? It means more money's going into the economy. If more money's going into the economy, what happens to the currency? The currency's fucking strong. It's really that simple, right? There's nothing really hard to understand about it. GDP month on month, we like to see it, but remember, whether the number's high or low, remember it's month on month, so it's only going to give you a move, in the short term. It's either going to give you a little positive kick, in a couple of candles, and then it'll go back to normal and so on. It doesn't really show any long-term movement, all right? Long-term strength or long-term weakness. Construction output, index services, industrial production, they're all month on month, that's fine. So there's no real big news next week for the pound. All right, guys, but for me, to summarise, pound is strong, okay? Japanese yen, I don't even know why we look at this. Everybody knows the Japanese yen is absolutely shit. You would be as well fucking exchanging services using chocolate buttons in Japan. Their currency is wank. But let's see what they've got. Not next week, when I see the last week. Manufacturing index, slightly up. Tanka non-manufacturing index is down. Final manufacturing PMI is 50, so that's okay. At least it's bullish, right? 50.0 is still bullish, guys. Consumer confidence is getting higher, so that's good. Monetary base year on year is a little bit less. Bonds up. Household spending year on year is down. That's quite a big drop. Leading indicators. Okay, so you can see it's mixed data, right? But you can see in that scale that I drew, with the Japanese yen being at the bottom, kind of trying to fight its way up as the stronger currencies. It's just going through its cycle, the cycle of life, if you like. So next week we don't have any red folders. I don't know why that's not red. PPI year on year is very important, so we want to see what that says for Japanese yen. Bank lending year on year, very important. Average cash earnings year on year. Why are none of these red? These are all very important things that are going to help or not help the Japanese yen. Okay, guys. So average cash earnings year on year, we want to see that either up or down. These are year on year, so these are very important as opposed to month on month, quarter on quarter. These are the most important ones. All right. Money stock, pre-limit machine tools. There's no Bank of Japan speeches. Normally, the Bank of Japan will intervene, and that'll they'll sell bonds and shit, and they'll make the currency come down. And what you'll find is retail traders start shorting pairs like pound yen, just because they see a fucking candle move, not understanding that the yen is still shit and the pound is still one of the strongest economies. So you would never sell it in a million years unless you're on crack, okay? And that's just the way it goes. But retailers will see a candle move, they'll have the fear of missing out, and they'll enter stupid trades like selling pound yen. Of course, if you're a scalper, that doesn't matter because you're only based on price action, right? But if you're like me, where you want to enter small risk and you want to let that run for weeks or maybe even months, then you really need to know this stuff, okay? So next week, we've got a couple of major things for Japanese yen. Japanese yen is weak for me, okay? What we've already done NZD. Now we're on the last one, USD, guys. Let's smash this out. So let's look at last week. Jesus, look at that. Okay, let's see. Final manufacturing PMI is 51.6, slightly 1 point less than before, but it's still bullish, right? It's still bullish. It's above 50. Pardon me. ISM manufacturing PMI is 48.5, so that's bearish. ISI manufacturing prices is 52.1, that's bullish. So you can see it's getting mixed data, right? And it's like the Chuckle Brothers to me, to you, it doesn't really know what it's doing. Powell speaks. So when Powell was speaking, I think he said they still don't have any plan for rate cuts. So that's dovish. That means bullish, right? So they don't have any plans for rate cuts. JOLTS, very important. Job openings. There's increased job openings, so that's strong. So there's another strong. What else we got? Non-farm ADP non-farm payroll change was negative. Unemployment claims were higher, so that's another negative. Final services PMI is still strong. That's okay. ISM services PMI is it's taking a massive jump to the downside. It was 53.8. Now it's 48. That's massively bearish, and this is still bullish though. So you see, oh fuck's sake, the fuck was that? Who was that? Fuck me, shit my pants there. That was loud as fuck. Who was that? What was I going to say? Fuck me, I'm lost now. Where are we? ISM services PMI. What was that? Mate, I fucking shit my pants. What was that? Because I wasn't expecting it. I was like, what the fuck was that? And my volume's up loud in case anyone joins. Right, wait, I'll crack on with this and then we'll mark up the charts. Right, 2 seconds. Is that Ian Downey? If that's Ian Downey, how you doing, mate? That's my mate for school. If it is Ian Downey, my good mate for school. This might confuse you, Ian. You're brand new to it, mate, so don't worry. I do this every week so I can explain the economies and stuff, right? And then I give you what pairs are strong, which pairs are weak, and then we trade the strong to the weak. And then I mark up the charts and blah, 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 okay? And then when I go to take the trades, I will do the trades live so you can copy me, all right? So don't worry. But let me crack on with this now. I'll get it finished off. Where the fuck was that? Right, so you can see that we're getting a lot of mixed data for the USD, right? So it's no longer... It's not that it's not strong. Of course, if you were going to trade something like the USD compared to Japanese yen, of course you aren't selling that fucking thing, right? Or Canadian dollar or what else is shit, the euro. The USD would be stronger. However, you can see that it's starting to crumble. You know, it's like having a statue and you're starting to shake it. And even though it's a solid statue, the concrete at the bottom is starting to crumble and it's starting to tip on its side. You know what I mean? If you can imagine that in your mind, that's what's happening to the USD right now. So it's still strong, but it's showing us that it's potentially weakening. Not ready for rate cuts yet. So it's still up there, but you can see it from this data, right? Crude oil inventories is a minus 12 million. So I believe that is going to be that'll bring weakness to oil, which is good because we're now in sales, right? And but overall, we really want buys in oil. If I was trading my managed account right now, I would not be taking sales in oil. You can take it, and I have taken it on my other normal accounts. I've taken it on my mate's account. I've taken it on my that funded fucking thing, and I've taken it on my personal 50k account, but I have not taken it on the managed account, right? Because it's a counter trend trade. On my own personal money and on my mates, who's like, mate, I don't give a fuck if you lose it, just crack on. Then of course I don't mind taking counter trend trades, okay? But on my managed account, I have to be fucking on the ball with that. And I part of my rules, I don't take counter trend trades. So I'm now in oil sales on that. For those things that I mentioned. And look, minus 12.2. Fucking fantastic. That shows us sales, right? So if oil is getting potentially weaker this week in the short term, what does that tell you about the Canadian dollar? Potentially. The Canadian dollar has had tons of negative news. Oil has fucking shifted from 3.6 million to minus 12.2. What does that tell you? Oil's coming down and fucking Canadian dollar is coming down with it, right? So we have to bear that in mind. That's great news. USD is getting weaker. If USD is getting weaker, which pair is getting stronger? AUD. So AUD's news is all good and fucking strong and healthy, right? And couple that with China's manufacturing being slightly better. It was mixed, but slightly better. And then USD showing signs of weakness. What does that tell you? AUD is even stronger now. Fucking happy days. So you know that for next week. USD average hourly earnings month on month hasn't really changed that much. Non-farm employment change has dropped significantly. However, it was better than anticipated, so it may have given a slight bearish move, but it wasn't that bad. Where you saw it in gold, gold went fucking nuts. USD unemployment rate is went up, it's increased. So yeah, it's shown huge signs of weakness. So USD is getting weaker, but you wouldn't label it as weak yet, and you wouldn't quite label it as neutral. It's just it's getting weaker, so we need to monitor next week's news and the week after and see if that continues to show weakness. Because next week it might come back bullish again, right? And then it's like, okay, we're back in. You know, so we have to take everything in context. So for now, USD is still strong, but it's simply showing signs of weakness. Okay. You wouldn't trade pound US, you wouldn't trade like GBP USD, right? You just wouldn't, because the two of them are like neck and neck. It's like two 20-stone guys fucking playing tug of war, right? Why? If you had an option, right, and you put a fucking 20-stone fucking rugby player at one end of the rope, and you put a 4-stone fucking badminton player on another end of the rope, one was GBP, one was USD, you'd want to fucking trade that because you know the 20-stone guy is going to fucking smoke them, right? Unless the 4-stone guy necks some spinach. But if you've got two 20-stone guys, you'd be like, nah, fuck it, I'm not going to bet on this because the two of them are going to be neck and neck. You're not going to take that risk and put a bet on two guys who are very similar, right? It's exactly the same as trading. You wouldn't take a risk on two pairs that are fucking very similar. You want to find one that's strong and one that's fucking weak, and you pair them two together, and away you go. So next week, let's see what we've got. Sorry if I'm speaking fast. It's just these videos take so long. We're already at 38 fucking minutes and I haven't even done the charts yet, right? But this is how much time I spend on the charts, lads. Let's have a look. Fed Chair Powell testifies. Treasurer Yellen speaks. Markets always kick off when she speaks. She's always fucking gobbing off, and markets always do something. Fed Chair Powell testifies again. 10-year bond crude oil inventory. So we want to see this. It shows their previous 12.2. If it shows negative again, that's good. We want to see some more downside. I would like to see that negative for maybe the next week or two, so we can get that run down to our main area where we want to then enter buys, right? So I want to see 1 or 2 weeks of weakness on crude oils. 10-year bond auction, core CPI. Remember, yo, no worries. No worries, mate. Yep. Yeah. No problem. So it's the crude oil inventories, right? So each country, so in this example, it's USD. So it's how much crude oil does the the United States, sorry, have in storage? So if it's what, so they'll have a set. So you'll think, well, how can it be minus 12.2 million? You think that means there's no fucking oil there? How can it be minus? So what they'll do is they'll have a stockpile, and that stockpile will be a certain amount. So let's say the stockpile is like 50 million, right? But obviously, that 50 million, when it gets to the far end of that, is classed as zero. But even though they've got 50 million there, they don't count that. And then they produce oil, right? Because that's like a stockpile. But what that means is previously, they were at this end of the spectrum. So they've got the 50 million in stockpiled here, right? This end of the spectrum, they were positive 3.6. So that means they had 3.6 million barrels on top of their stockpile. So, like, fucking hell, we've got far more supply than we do demand. So they kind of slow down production a little bit to see how it eases up and try and get rid of this 3.6. But they don't want to make it zero, but they want to get rid of the 3.6. And what's happened is they've slowed down production so much and demand has exponentially grown that it's fucking eaten into the stockpile by 12.2 million, barrels or whatever they deem that is. So now they're like, oh, fuck, fuck, fuck. Now they'll increase production and they'll bring that back up. So they'll restock the stockpile. Once that's restocked, it will then start piling up on the positive side. And that's what that means, mate. So previously they were up here, and instead of going down to zero, they've went right in and they've eaten right into their stockpile by 12.2 million. I don't know if that's barrels or whatever, how they measure it, but that's essentially what it means, mate. Fire away. Yep. Yep. Well, it could do, mate. Here's the thing, but in general, so what happens is it's just too overpriced just now. So what you're saying is correct, but they need to come up with something to make it come down, right? You can't just keep buying oil, buying oil, buying oil, buying oil. So what happens is they need a reason to short oil, and what they'll do is, and I'll come across and show you. So they need a reason to short. Oh, sorry, fuck's sake. Hold on, get rid of this. So what will happen is we're up here now. They need a reason to short it. So like, fuck, we're a negative. We need to chase up supply. Boom, boom, boom. So they'll now use that as the reason to go like this. Boom, 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 and they might come to here. This order block here. Bang, reject, and then fuck off. Or they make them all the way down to here again. And fuck off. Well, not even here. Sorry, they might come down. Aye, bugger off. They make them down to here. When I'll draw the box, it is here. They'll come down to, or it's going to be here. They'll come down to. Bang, 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 bang. This one here is my preferred because of the Fibonacci stuff, right? Because of the 786 and so on. So that it's just a better area of value. But can you trade it from here? Absolutely. But this is just the better area of value. So this is the one down here that I really want to see it come down to. And that's the reason for it, mate. They'll just provide this negative news to bring it down. So they really want to buy oil, but they're like, I ain't fucking buying oil when it's nearly at its highest price ever. Nobody wants to fucking buy, right? So they need this to come down, and they'll lump in, mate. That's how they do it. That's it. Yep, correct. No worries at all, mate. No worries at all. Next week we have got core CPI month on month. Month on month, we don't care, but CPI year on year. I mean, we do care about all of them. These are for the short term, but CPI year on year, definitely care. Excuse me. Unemployment claims, we definitely care about that. We've got crude oil inventories next week as well. We want to see that. FOMC, do we have? We got FOMC members. Let's see. We got. Right, we'll just get member. Bowman speaks. Okay, hold on. Pardon me. We've got 30-year bond auction core PPI month on month, PPI month on month, consumer sentiment and inflation expectations. So these are all quite big things for next week for the USD. All right. So for me, USD is still strong, but we just have to have it in the corner of our mind that it's starting to crumble. You know, the bottom parts of the concrete are starting to crack. You know, if that's how you want to look at it. So without further ado, let's fucking crack on to marking up our charts. AUD CAD. So AUD is strong. Canada is weak. We are definitely. I'm going to daily. It's okay. We're definitely looking to buy this. However, you would never buy it from here in a million years. We're not buying it until it comes down, retests here, and then goes. If it doesn't do that, we ain't touching it, right? So I'm actually now going to take that off my watch list, and I'm going to put in two zone alerts. So I'll put in an alert here, and I will put in another alert just at the top zone here. I'm going to put in two alerts here. All right, let me just, can I move that up? Now, there we go. I'm going to put that there, and I will put this here because you want it to give you an alert just before it hits, right? So either here or where's my next box? We will put that along here. Let me just check if I'm even going to care. I should have done the Fibonacci first. Hold on. Give me a second. From here to, I'll just put it here. That's the 50. So do you know what? I'm going to take that out. If you want to mark it up, you can. Unless it hits here, I don't care. Can you trade the 50, i.e. the 500 fib? Yes, you can. I just choose not to do it because it's a kind of meh. It's a kind of shitty place to trade from. Can you get good trades from it? Yes, you can. They're probably like a 60% probability, and I prefer ones with a kind of 80% probability. So if this goes back down here, rejects and goes, that's the one I care about. I don't really care about 50-50 probabilities. So I'm going to take that off my watch list by making it black. AUD CHF is definitely buys, but you already caught that, right, Mel? Well fucking done, mate. Well done. So it's buys. I ain't touching it again. All I'm doing. Yes, mate. I know, and I don't think it will, mate, because you've now got AUD, which is strong. You've got USD, which is becoming weaker, which is giving that extra strength to the AUD, and Canadian dollar is shit, and oil's getting weaker. So the Canadian dollar's losing all of its strength, and it's obviously this is going to push further. So yeah, yep, right, aye, yep, fucking hell, mate, brilliant. Brilliant, mate. Superb. Absolutely superb. Nice to hear that. We've got Aussie dollar, Japanese yen, which it's a buy, but you wouldn't buy it here, right? Why would you buy it at its most expensive price? It was like I think it was 2 years ago, like Rolexes and stuff. They were going for like fucking 27 grand for a buck sheath. You look at that same watch now, it's going at 19 grand. So if people bought it 2 years ago, it's like, why would you buy, Rolex when it's here? Just wait fucking 2 years till it comes down. It's the same idea here. Why would you buy when it's at an all-time high? Yes, it's a buy. It could economically, but you just wouldn't buy it now. If you haven't already got in, you fucking missed it. So let's have a look at weekly, see if it shows us any cleaner pullback zones. Yeah, I mean, look, it's just disgusting, guys, right? That's not an imbalance, so you wouldn't mark it there. It's probably this area down here. I just think it's shit. I think maybe your best area is going to be down here. There's nothing clear. And see, when there's nothing clear, guys, just fuck it off. The power of trading is, many traders forget this, you have the power to decide what you're going to trade and what you're not, right? Just because there is a trade doesn't mean you have to take it. Look at this. This is if this gets to here, what's that? AUD USD. If this gets to here, right, what you'll probably find is USD will come in a week later and there'll be massively strong news, which will then pull this all the way down here, right? That's what will happen. Am I going to trade it? Probably not. because it's just ranging. I don't like it ranging. I only like it when it's doing this, right? That's a clear trend fucking to the downside, right? So when you trade trends in line with it, it increases your probabilities massively. When you're just ranging, yes, you can make money, right? But if you've got an apple tree and you go to the apple tree and a couple of apples have just fell, you've got the choice: do I pick up the apple from the ground which has just fell, which is still quite fresh, or do I climb the fucking tree to grab an apple which I know hasn't touched the ground, but I have the added risk that I might fall off the tree and fucking break my neck? You're just going to pick the fucking thing up off the ground. You aren't going to bother wasting your time going for the harder one, which is up a tree, right? It's exactly the same trade. Why would I bother with this trade when it's a harder trade? The risk is more against me. The probabilities are more against me. Yes, it could work out, but it's not easy pickings, right? I just go for easy pickings. You don't have to risk more of your money in the market. Euro AUD. So it's coming down to an area of value to buy. I'll just be watching it now. This one is an area to sell. Euro is neutral and AUD is strong for now. So even though it's coming down to this area to buy, I wouldn't be buying it. I just marked it up so we know that a possible rejection zone. But I'm still waiting, guys, for this to come back up, retest here, and then melt. Remember what happens is the previous support breaks the support. That support then becomes the resistance. So you could drag this across here if you wanted, right, to be that extra thingy. Comes up across, rejects, comes up here, retests here, rejects, and then melts, right? So it would still be a sell for me based on economics, but I ain't touching it. EuroCAD, I'm not even going to bother. Absolutely dog shit. Look at that. Massive range. Why waste your time? Euro CHF, another one. Did you catch this, Mel? It's exactly the same as AUD CHF. Fucking beautiful. And it's the same as pound. Yes. Yes. No worries at all, mate. No worries at all. I mean, look, it's fine. I didn't fucking take it. I missed it, no, mate. Jace, I've just saw your message, mate. I don't know where it is. Maybe it's down at Ticket 2. Aye, but I just saw your message pop up. No worries. I absolutely shit myself. It was Jace that shouted in the mic. He's saying he's still learning Discord. So yeah, Euro CHF. Let me see. So CHF is weak. Euro is neutral. So what? Yeah. Yeah, it's still a buy for me, but it's we've already missed the main move, right? That would have been the main move here. If it comes back down and retest here, I would take it, or retest here, I would take it. You can see, excuse me, it's came up to this area of imbalance. It's just pushed above it, which is perfectly normal. Sometimes it comes to it, sometimes it pushes above it to hit people's stops, right? Because it knows that people put the stop losses just behind the previous areas. Comes up, stops them out, fuck off, melts, and away it goes. So if you caught this move, well done. But there's nothing more to trade on it as of yet. So I'll keep it on. No, I'll take it. No, do you know what? I'll keep it on my watch list just to see where it goes. But I'm not. It's not really one that I'm trading. Here's one that I gave, but I already did mention. I mean, if you, Mel, I'm sure you saw this from my video I done 3 weeks ago when these candles were simply ranging here. If you go back 2 weeks ago, 3 weeks ago, whatever, and you rewatch my videos and trade reviews, you will see that I literally drew this up and I said, guys, what I'm waiting for is the break of this zone. I'm not going to bother trading it. I'm waiting for the break and the retest. Once it retests here, you could then enter the sell, right? You'll see I've done it fucking weeks ago. And this is exactly how it's playing out. The other day, I think it was only me and Big Jace that were on the live, and I was explaining, even though this is playing out, I ain't taking it because economically it's shit. Euro was strong at the time, now it's neutral, and pound is strong. So strong and neutral. Can you trade it? Yes, you can. Do I want to? No. Do I fuck? Why? Because it's just shit. It's like having a tug of war with a 20 stone guy and an 18 stone guy, right? You're like, the 18 stone guy might still win. He's in with a chance. You know, there's not that much difference. You want to be playing tug of war with pound, which is fucking 20 stone, and Japanese yen, which is 4 stone, you know, because you know the 20 stone guy's going to fucking win. That's exactly how you view it in trading, right? So you don't want to be, I personally don't want to be trading a neutral pair with a strong pair. I just don't like it. Can you do it? Yes. Do I want to? No. You look to the left, it's dog shit. So the next area, I want to see what it does here, right? When it gets to here, what we do at that stage is we review pound, euro pound, and we review the economics of the euro and GBP, and then we see, has anything changed that one is strong, one is weak. If euro becomes strong at this point for whatever reason and pound becomes weak, you could then enter a buy there. Absolutely. If we want to have a look at euro GBP here, let's look at the data. Let's just see what the rest of the world are doing, right? So let's look at the overview. This piece of kit's fucking invaluable. So it said kind of neutral, more to the buy, but neutral. Let's see what the idiots are doing. They're all in buys. So dumb money index. When I was a sat down, I also. Oh, I'll read it in a second, mate. 2 seconds. DXM, where are we? So retailers are all in buys, right? Let's see what the banks are doing. So you always want to be doing the opposite of what retail traders are doing, right? Because they're always fucking wrong. If you look down here, bottom right of my screen, if you can't read it, it says 76.9% of all traders lose money with this provider, with the broker, right? So whichever broker this platform gets their data from, 76, let's just say 80% of them are fucking wrong, right? So you want to be doing the opposite of these fuckers. If they're in buys, you want to be in sells, right? And I already said sells before I looked at this. Let's see what the banks are doing. Banks are kind of 60-40, predominantly in sells. USD Euro shorts. Yeah. Their shorts have increased. They've went from a negative to a positive, right? So their shorts have increased. And where does that show in the charts? It shows right there. You know, they've now changed from going long. They've now changed into shorts. Wait till I fucking move this out of the way. It's driving me nuts. There we go. And they've now moved from going long to into shorts, which is exactly why you're seeing this pattern here, right? But I ain't trading it. Euro USD, I ain't trading that. Look, it's just absolutely shit. You don't have to trade everything, right? This is what a lot of traders forget. They think they need to be in a trade every fucking day, every week. I will happily sit here for 3 fucking weeks and not touch a trade because you want to be a sniper, right? More trades does not mean more money. It fucking does not. It usually means the opposite. The more trades you take, you usually lose more money. Euro Japanese yen, it's buys all day long. It still buys because Japanese yen is so weak, but you cannot buy it here. It's way overpriced. It's like buying a Rolex fucking 2 years ago, right at the peak price, and now they're going for a fraction of the price. Euro NZD, dog shit. Look, it's just ranging. Look, ding, 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 ding. Why would you want to trade that and just keep yourself in drawdown, right? Why? The point is, look, it's coming back to a zone, give a liquidity grab, and away it goes. But it's just ranging here. I ain't touching it. I'm going to take that off my watch list because what's the point? I ain't touching that. It's dog shit. GBP AUD, rangy, absolutely stinking. I'm only looking to trade this when it hits here, right? That's the only time I'm interested in this pair is when it comes here. Apart from that, I ain't watching it, right? So I'll keep it on my watch list. I will include an alert. Where will I put it? There we go. I'll put an alert there. So when it hits here, I'll know to keep my eyes on it, right? And I'll see what it does. Pound, Canadian dollar, definitely buys. And look, again, guys, if you go back to my video 2-3 fucking weeks ago, you will see I already painted this up. And we always talk about this every week, right? Resistance, 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 resistance. Breaks the resistance. What happens? The previous resistance becomes the new support, right? We fucking talk about it. It happens time and time again. And I said to you, if it comes back here on retest, you could enter a buy. If you enter the buy, remember this is a daily time frame, so that's a lot of fucking moves. If you go on the hourly time frame, that's going to be a big move, guys. But I just didn't want to do it because it's shit, right? The pairs are pretty meh. But it's nice to see that it's worked out. Here we've got GBP CHF, pound Swiss franc. Exactly, it panned out. Boom. I didn't catch that either, but you can see it exactly panned out, right? And just wait for a pullback now. GJ, again, there's nothing to trade because you need that pullback. It's buys. You would never sell this in a million years. Again, if you guys are doing sells with Lee, that's absolutely fine because you guys are doing scalps. You're in and out in 10 minutes. I'm talking about, if you're going to hold this for a couple of weeks, you ain't selling it, right? GBP NZD, it still buys, but it's dog shit. Look, you've just got this big range now, right? It's horrible. I've already got my alert set, so I'm not touching that. GBP NZD, look at that. Fucking hell, you would almost think that we know what we're doing here, right? Look, fucking done this last week or something. Coming back for the retest, I will definitely be keeping my eyes on this. GBP NZD for sells. I will put another alert here. There we go. I'm going to keep, so that's the closest one. I'm going to put that in my notes. GBP NZD. But, sorry, is it? Oh, it's GBP USD. Sorry, fucking wrong. USD. Now, let me think if that's going to be correct then. Because pound is strong and USD is showing weakness. So, what we need next week, guys, okay, next week's news for the USD is going to be very important. If it's weak numbers, we can enter on news moves and we'll go enter the melt here, right? Is it a nice trade? No, it's not. Is it tradable? Yes. So I would trade this on like my own personal account. I would not be trading this on the managed account, right? Why? Only because it's ranging. Look, give me a second. Look, it's just, fuck off. Like, it's just ranging, right? It's in this range. So I would be happy to take this on that stupid funded account or my own personal account, yes. But if it was the client's managed account, the PAM that I'm building up, no, I wouldn't take it. Only because it's ranging. That's it. It's maybe a kind of 60-40, 70-30 trade. And on the managed account, I prefer to take 80-20, 90-10, percentage trades in my favour. So I'll keep my eye on this, lads, and see what happens. But USD is weak just now, and pound is strong. So that would show you buys. So the other thing that we could potentially see, if USD news comes in weak all next week, what we could see is this. Bosh, boom, boom. And the only time we are looking to enter this is here. That's it. When this happens, we do not give a shit. We want to enter it here. It's going to be exactly the same as this. Break above, retest, enter, and away it goes, right? That's how it will play out, guys. Do not get trapped by fear of missing out. Oh, fuck, I need to enter this trade when you see it flying above here, because it will come back and retest and then go. That's when we enter upon the retest. If USD news next week is strong, then we will enter the sell here. Stop loss above here and enter the sell, okay? So that's the way it's going to play out. NZD, USD. NZD is, of course, far weaker than the USD. So what I'm anticipating, yeah, it's the same, right? I don't see that playing out. What I actually see playing out is this coming up. USD news being strong next week, and then we get this melt. Okay, so that's potentially what I think we're going to see. And it's probably going to be, if that's the case, it could potentially be the same for pound USD, but we have to see because NZD is weak, USD is far stronger, and GBP is strong, USD is strong, but a little bit weaker at present. So next week's news is going to be very important, okay? None of those two are actually very nice trades, but they are perfectly tradable, okay? But we're going to play it by ear, safety first, and we'll see what news comes out next week. NZD CAD, same again. So CAD is now weak. Oil's getting weak, blah, blah, blah. We're looking for it to come up here, reject the test, and if there's good news, but if oil then gets strong, like, so we get all next week for our oil melts, right? We close it out to sell. We really want to enter that buy for oil. That's what we really want. We really want the buys on oil. If we get the buys on oil, it's going to provide us with strength to the Canadian dollar. And this is going to reject here, and it's going to fucking melt. Happy days, all right? That's what we're looking for. NZD-CHF, nah, nothing there. I'm not going to bother USD CAD. We can have a look, but look, that's dog. Why? Why would you trade that? That's fucking horrific, right? It's still playing out in our areas, right? Our areas still work every fucking time. USD Japanese, I've already done that. USD CHF, nah, I wouldn't trade that. I wouldn't trade it, lads. But you can see, look, support, 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 breaks the support. That support becomes the new resistance. Bang, resistance, reject, and away it goes. It fucking happens every time. Every single time. Let's have a quick look at the dollar index. So look, US dollar is just ranging. And I already, if you got fucking hell, if you go back last week's video or 2 weeks ago, I literally said to you when I drew this up, right? I drew these fucking things up and I said what I expect from the USD is it's just going to range in this thing. It's just going to range until they eventually cut rates or not, right? Or something. We get massive news which makes it go. But it's just ranging, and that's exactly what I predicted. You can go back and watch trade reviews from 2 weeks ago, whatever. I already called this because once you know how to understand the fundamental data, you can kind of call these things because you just think, well, that's obviously going to happen, right? Oil, we're in sales just now. I don't, sales is a counter trend trade again, like I've mentioned. That's why I wouldn't take it on the managed account, but I'm happy to take it on my 50k account and that funded account. I'll show you results from both, whether losses or wins. I don't mind. But so far, it's going well. I entered one position here, which is in drawdown. I entered a second position here, which is doing very well. So that's fine. I'm anticipating it to either come to here or here. I'd like to see it come back down to here because that's the 778, the 786 Fibonacci. It's a fantastic area of value. As soon as that fucker hits there, we will be entering buys, okay? Just like this. And well done, Mel. I know you caught this, and I think your account's up, what, fucking $5 grand or $6 grand or something now by catching this. I had prepared this trade for 3 weeks and I fucking missed it. When I got out, it was already up here, and I thought I'll wait for the pullback and then I'll enter. And we never got the pullback and it flew. Well done to Ian for catching this trade. Well done to Mel for catching it. Mel was risking half a fucking lot, and now his account's up like $5 or $6 grand from that one trade. So well done, mate. That's fucking sick. Gold. Yeah, I mean, look, you can see it respects these areas, right? Look, support, 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 support. Bang. It's just ranging, though. So long term, I wouldn't touch it. But I know you guys following Lee's scalps. Yeah, you can crack on. And look, by the way, let's cover our indices first, and then we'll cover cryptocurrency, right? Look, the same thing happens in fucking indices. Indices are always buys. Don't ever sell indices, right? They're always fucking buys. But you need to wait till they come into an area of value, right? So we need to really wait. Wait, I take it rid of this. It's looking a bit messy. Let's move this up to here. That is an area of value, the previous order block. So, hold on. All we're waiting to see now, it's as simple as this, guys. We want to see it come back down. Hey, what happened there? Come back down, retest this zone, and away it goes. All right. Remember, with the indices, you need to make your lot size very small, like 0.01, blah, 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 okay? They're all the same. I won't bore you. Every single one of these pairs is exactly the same, okay? So I won't bore you. Yeah, look, it happens every time. Look, here it is down here. Look, boom. So when we mark our boxes up, right, we ignore all of this. We don't give a shit. We only care when the market hits our area and away it goes. Enter. And the same again. Look, boom, order block comes back, retest, enter, and away it goes. That's the only time we enter, guys. It saves us so many emotions. It stops us from over trading. It stops us from getting FOMO. It stops us from risking too much. It stops us from entering too many trades. It's fucking phenomenal. It really does help a lot. Bitcoin is coming back down to the area previously predicted, around about here. They all work the same way, right? They are risk on or risk off assets. So if I got XRP, I don't think I have XRP here. But look, they all come down to the same areas, right? They all come. So I haven't even looked at this, so I haven't marked it up. But here is your area here. There we go. Look, it's fucking bang on, right? If we'd marked that up, it'd be bang on, and that's exactly where you would put it, right? Because you've got your small candle and then your engulfing candle for the order block area, and away it goes. It's the same for everything, lads. Absolutely everything. So that is pretty much it. All I really have next week is not much. GBP USD, and there was an NZD, right? Let's have a look. Was it NZD CAD or NZD USD? I mean, they're shit. I'm not even going to give them to the group. The only one I'd really look at is GBP USD. let's see. There's nothing. There's nothing there yet, lads. And this is normal, right? This is normal. This can happen for 2 or 3 weeks. It's perfectly fine. Don't be someone who thinks, oh, fucking hell, let's just shit. I've been waiting for 2 weeks without a trade. Because you will then create bad habits and you will then lose your money. I'm telling you right now, you need to build patience. And that is it, lads. So really all I have for next week is pound USD. This has been quite a long video, but it's been very in-depth, right? Let's quickly look at pound USD on this before we wrap up. And we'll call it a night. Right, what have we got? Overview. Pound USD is a buy. Oh, that would make sense. Seasonality. Seasonality is quite good. So what are we in? July. July seasonal. This is a buy. Okay. DXM. We want to see these fuckers in sells. They're in sells. Fuck my life. COT. What are the banks in? The banks are all in buys. Everything. All the fucking planets are aligning here, right? So let's now go back to pound USD. That is not a sell. I'm going to change that to a fucking buy. So this is what I'd like to see playing out, lads. That's it. You wouldn't buy here. Why? Because it's in an area of rejection, an area of resistance, right? We really need to see it break above here, come back down, retest, and then we enter here, and away we go. Okay, so I am going to fucking delete that, so I don't want to confuse anyone. I'm going to delete this yellow line just because it's annoying. There we go. That is our entry, guys. Okay, so that's the only one I'm going to put in the group for now. And the rest of them we will play by ear. Okay? I'm going to stop this video now, and then if any of you have questions for me, I can answer your questions and I'll run through whatever you want. Okay? So, see you in the chart next week.